Good day, guys. Welcome to the second subsection of structure. And in this second subsection, we'll talk a little bit more about the higher time frame in correlation with other time frames. Basically, the higher time frame in correlation with lower time frame structure. Firstly, structure doesn't help us trade. Structure is just rated as the backbone of institutional trading and order flow, where institutions, big banks, hedge funds, etc., where they want to take their positions from. Now, the idea of structure incorporated with supply and demand and how the supply and demand zones may not hold based on the mitigations they have had, along with Wyckoff occurring in that area. This is what is going to help us frame a bias and a refined entry to where we believe price is going to go to. But however, structure alone is not always the thing that is going to tell us where the markets might go to. All right, so I'll go into the charts for more explanations. As we see here, the black bullish line represents the 4 hour time frame, while the orange line represents the 30 minutes and the green line represents 5 minutes. I won't really spend much time because of I want to keep this video short. So we see price making new bullish points and making new highs, takes out these highs, come back, higher, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So now on the 30 minutes time frame, let's zoom in to see what price does. Okay, on the 30-minute time frame, we have a different narrative. Remember, black for 4 hour, orange for 30 minutes, green for 5 minutes. On the orange time frame, which is the 30-minute time frame, we see a different narrative. Price goes up, comes down, goes up, comes down, still being part of this higher time frame move. Goes up, come, goes up, comes down, higher, higher. We see these lows being held. These lows being held and never invalidated. Lows being held. At this point, we're probably looking for entries at this point, but price comes to take out this low and starts breaking down. This is how we got the idea of counter trend trades comes from, where price goes bearish for a short period of time. We see price going, creating new lower lows, but we still have this higher time frame move in mind, knowing that most likely if this low is to be held, price will be at above this low, probably in a demand zone above this low. Okay, yeah. When price start breaking down, we are not trying to sell this thing, or we are not assuming that price has turned bearish overall. We still have this bullish impulsive move or bullish order flow on the higher time frame in mind. That is why it's necessary to zoom out. You can't just enter a lower time frame and trade from it without knowing what the higher time frame is telling you. And the higher time frame zones hold more probability, and with the higher time frame you can predict better where the market is heading to or what the market is doing. So at this point we shifted bearish for some time, a short time rather. Sell back down, this low being held. We see price starts going up again. Low held, low held, low held. Same thing happens over and over again. This is just a theory explanation of fractal markets. And I'm trying to keep this video short, so I'll go straight to the chart now. Since I did an example on the bullish market structure, I'll look for a bullish play to explain it better. Let's go to, I think, the daily. All right. Okay. Let's use this as a perfect example. All right. This is UAUSD occurs on all pairs, so it doesn't really matter which time frame or which pair I'm doing this analysis from. So we see price printing a bullish order flow, making new higher highs and higher lows, basically higher high, low formed, high formed. I think I should use a better tool than this shit. Okay, the high form, this low held, price never comes below this low to invalidate it. So let's say, yeah, higher high. Okay, so yeah, this is a major swing point I'm marking out. And if you zoom in on lower time frame, or we can see another bullish point forming. Let's make this red. Okay. Let's take this as that 30 minutes orange line I was using for example. We see those mini structures being formed, still being part of this higher play, this higher play, this being part of it. Higher high, higher low. Hope you guys are getting my point I'm trying to make. If you zoom, I don't have replay to right now, so if you zoom in on your lower time frame, you see what I'm talking about, and you see that this is actually a bullish move. Never comes down to validate this low, creates a low, breaks it, never comes down to validate it. Okay, price comes to this point. Okay, never broke it. Created this low from this bullish move up here. Talking about this bullish move, down move, break up, comes down, never breaks it at this point, comes down, broke it at this point. Yeah, we see this pullback here. That's still the higher time frame swing point. Yeah, so I'll use this green line instead. Clone it. Okay. Take for instance, this is the higher time frame swing point. Then these red lines are the lower time frame bullish plays. All these bullish plays being part of this overall push to the upside. And we start seeing price break down and becoming bearish for a short term period, then takes out this high again. That doesn't mean we can't get involved on the sales down back to this demand. Price didn't actually come lower to the discounted point, but it did here. Yeah, we see these lows being held, takes out this high. Then if you can use the red dotted lines to signify the minor points, what happened? Fuck. Yeah, fussing too much. My music player just dropped. Sorry about that. So we're going to use the red lines to signify the lower time frame moves. Your higher high being formed, higher high being formed, higher high being formed, higher high being formed, higher high being formed. Price starts to break down again for the short term. Never gets below this high. Sorry, this low. And we can see on the short term we can be bearish till it gets down to this demand zone. Seeing it become bearish, we are not surprised. We actually look for price to go a little bit lower to this demand zone, feel these imbalances, and so tapping into this supply and demand zone. Sorry, this demand zone and mitigate it. I won't really speak much on imbalances because I'm not making the video on imbalances now. But however, we see price starts to break down and create that bearish, overall long-term bearish move. Price is no more bullish. It's bearish. Breaks down, breaks down, breaks down, breaks down. As you see, his price is breaking down. It's maintaining this high, maintaining this high, maintaining it. So yeah, I'll keep the video short. You can go on your chart and practice how to make these higher time frame correlations with the lower time frame correlations to have a better sense of what the market is doing and where the institutions, hedge banks, big banks, hedge funds, what they are looking to do and which points they are looking to take trades from. All right, thank you for watching. Like, subscribe. Have a great day. Happy Christmas, by the way, and a happy New Year to your family. Peace.